Okay, hey everyone, it's Michael Valtos here from Orderflows, and this is the Orderflows Inner Circle weekly webinar number 15, The Flip. This is part 2 of The Flip, and there'll probably be another part actually. I'll do it this week. I'm getting a little bit caught up. You know, it's been kind of an interesting last couple of weeks. Chicago Cubs won the World Series for the first time in, gosh, I think since 1908, which, it's hard for people, unless they're a Cubs fan, to understand. I grew up about 45 minutes away from the Cubs Stadium, Wrigley Field, and I literally during the summer growing up, every summer I'd be going to Cubs games. I'd be watching them on TV, and even when I was working on the floor, my Japanese yen broker, he had tickets, and whenever he couldn't go, he'd be passing them on to me and some of the other guys on our desk. So I die-hard Cubs fan, and it was just a big event. I'm still out here in the Philippines, but I got friends from Singapore, friends from London that I worked with or grew up with. They made their way back, and they spent crazy amounts of money on tickets. $2,000 for a seat way up in the stands, $2,500, and it was just my wife doesn't understand it either. I try to explain it to her, and she just doesn't grasp it. So I was a little bit caught up with that, and then obviously the presidential election, very, very interesting times. I did expect Trump to win. I didn't believe in all the polls. They're very heavily skewed towards Mrs. Clinton. That you can't take those polls at face value. There's just a lot of bad information out there, and I said, I'm not a political person, but I just found this election cycle so fascinating, and even now after the election it's still fascinating. But that said, I'm getting all caught up on everything. I was actually hoping to get this out a few days ago, but I finally got the working edition for the Flip. It's available in the download section. You can download it. The setup is a little bit different, but I'll take you through the actual indicator and some of the things that you can adjust on your own style of trading. And so let's just jump into it now here. So again, this is part 2 of the Flip, and you just go to the members area, and it'll be available for download there. And this one, the setup is a little bit different. What you do is you download it to your hard drive, and you just click on it. It'll look like this. You save it to wherever, whatever folder. Make sure your NinjaTrader is closed. It'll self-install. So just click on this little icon here, and it'll just it'll prompt you through the setup, and it'll take care of all the setup for you. Then when you restart NinjaTrader, it will be in your indicators. So, but it doesn't say order flows. It just says the Flip, and so you have to scroll down. It's because it's alphabetical. It'll be just below. Well, assuming you don't have a lot of other indicators, it'll be right below this thing that says TEMA, which is some moving average thing. It's alphabetical, so the Flip it's in there as one word. So you can just pull it up right there. Now there's a few settings. There's Flip A, Flip B. These settings you can adjust the intensity, the delta, and both of them. And there's, again, for the plots, there's 2 types of plots. There's a plot for the Flip A, which is this one, and the Flip B, which is this one. Flip A, it's set at 4 point. This is the default setting for when you load it. So the default is 4 pixels for the first triangle for Flip A. For Flip B, it's a bit heavier. It's 8. You could adjust it if you want them to be both the same. You can, or if you just keep them separate, you can. Is there a difference between the two? Well, there is. Is one more stronger than the other? It's debatable. The person that I've used to work with that sort of shared this way of trading with me, he looks at more of the Flip B, and but I like Flip A. Sometimes I'm very want to get in and out as faster. Flip A will measure the immediate change. Flip B will let the market pause and then give the signal. So they're very similar in the way they're calculated. Now, before I jump into examples with charts and everything, let's just get the groundwork there. There are highly liquid markets, there are medium liquid markets, and there are low liquidity markets. What are the highly liquid markets? Obviously the E-minis, bonds, Euro stocks, 10 years, 5 years. Medium liquid markets, crude oil, bonds, and low liquidity markets are YM, the mini Dow, the DAX, the NQ. You could probably add on there the currencies, 6E, 6B, and 6Y. But most people are confined to the E-minis, the crude, the bonds, the mini Dow, the Nasdaq. You can use the indicators on any of these markets, but when I talk about the settings in a bit, you have to differentiate them, because when you're dealing with low liquid markets, markets that don't have as much liquidity as, say, the 10 years, you're going to look at it a bit different. So if you have your settings set for a market that has low liquidity, it's probably not going to be as effective on on a highly liquid market. So my preferred settings, okay, and that's this here, right? Flip A, intensity 1, intensity 2, delta 1 and delta 2. It's going to be 15 and 100 or 15 and 200. And to change it, keep intensity 1 and intensity 2 the same level is fine. And delta 1, delta 2 also the same level. So, it would be 5. When I say, something like 15 and 100, it'd be 15, 15, 100, 100. And on flip B, also, I generally always keep the flip A and flip B settings the same. So, everything's going to be 15, 15, 100, 100, or 15, 15, 200, 200, or, in some cases, extreme cases, 1, 1, 10, 10. And when you're dealing with the intensity, okay, the lower the number, the more powerful the intensity is. So, and it's on a scale of 1 to, I want to say 100, but I think it only goes up to 99 actually. So, I mean, I wouldn't look at anything above 25 for sure. So, I usually tend to keep it between 1 and 15. Anything above that it starts to bring in a lot of trades, which is not something that I am looking for. Delta, it deals with the volume of trades and the delta. So again, it's basically a number between 0 or say 1 and I don't want to say infinity, but realistically 1 and 1,000. Okay, and on less liquid markets, like I said, like the DAX, okay, where you got a lot of bars putting in deltas of 10 or something. I tend to keep it smaller. I'll use 10 or 15. I won't keep it so tight that it's very restrictive. But anyway, I'll get into that in a bit. So, highly liquid markets, 15 and 100. Or 15 and 200. It depends. I mean, you could experiment. I use 15 and 100, but one of the persons I was working with when he was testing it said, hey, 200 works okay. It depends. Do you want more signals? The lower the numbers, the less signals you're going to get, because it's really tightening it up. Medium liquidity, 15 and 50 or 15 and 75. It comes down to your own preference. There's not going to be night and day differences, if you're using 50 and 50 or 15 and 75. If you're using 15 and 50, maybe you get 10 signals. Okay, if you're using 15 and 75, maybe you get 12 signals or 13 signals. Low liquidity markets, markets that don't put in a lot of volume as much as other contracts. Things like mini Dow or DAX is a good example. I tend to tighten it up a bit. I'll use 5 and 15, and and honestly, when when I first worked with this, while back, I don't remember when, we used extremely tight numbers, and I think it was one probably, and actually it was probably 1 and 0, but we're giving it out, because 1 and 0, you get very few signals, maybe once or twice a day. And in the next presentation, which I'll hopefully get like tomorrow for you guys, I'm going to go through a lot of charts with a lot of different settings, so you can see, today is more of just this is the first one where I'll sort of introduce you to some of how you can see the differences and and the signals. But when we first was using it, actually it wasn't my idea. It came from me, a guy I used to sit next to in the trading room. And again, going back to Paul Rotter and the flip. Okay, I don't know Paul Rotter personally, but his way of trading, which is basically okay, say he wants to buy 15s. We're trading 17 right now. He'll put in his bid there at 15. For whatever, then he'll put massive size at 17, at 18, at 19, just to give the impression of false supply in the market. And the market would sell down, he'd get his fill, then he would cancel his offers, and the market would go back up, and he's in the money. And there are times when that actually happens in real, with legitimate orders. Okay. And being able to pick when it flips is going to give you insight into the market. Okay, because what causes the flip sometimes is a perceived change in supply and demand, but it corrects itself sometimes pretty quick. But generally, you're looking for the market to continue on in a direction of the of the correction. So anyway, I think I probably just confused you guys a bit more. So anyway, I'll just move on. And again, since it's delta related, okay, it's delta related, so it's advisable to trade during the most active times of the trading day, meaning trade during the day session, not the evening session when volume drops off enormously. Again, if you want to trade the evening session, you're better off trading markets during that time that are open. So if you're trading in the evening, you're better off trading in Asia during the Asian session, trading Nikkei, than trying to mess around in the bonds or try and mess around in the E-mini S&Ps or the mini Dow. Go where the liquidity is. There's always a market open generally. During the European session, you got Bunds, you got Euro stocks. Those are extremely liquid in the morning, in the European morning, and obviously during the day you've got the U.S. markets. So again, it deals with delta. So when you're dealing with delta, you want to get it when it's most active, to give you the best read on the market. So anyway, let's jump into it here. So just quick examples just to whet your appetite. So these are the types of days that you wish for. This is the Euro stocks, and it's a 3-range chart. This is just what, November 1st. 445, you get a couple signals, couple buy signals right here as the market's moving up. And then starts coming off, boom, you get a sell signal here, and it's just straight down until this is at, what time is that, 6:30, 6:31, all the way down, until past the cash close and into almost the close of the futures close of the day, which is pretty late. So if you're trading a one lot, that's a nice move. And again, those are the types of days you wish for. They do happen once in a while, but not every day. Generally, sometimes you get stuff, crappy markets like this, where it moves sideways. This is part of the next day. This previous day was November 1st. This is November 2nd. Again, 4 in the morning. Gives you a buy, then turns around, gives you a sell, goes sideways, gives another sell, and then just goes back up, gets a buy, goes back down, and then then you get a nice signal here. You get the sell, and then it makes a nice 20-point move lower. Sometimes you got to deal with stuff like this, and again, this is just giving you raw trading signals. in the next presentation, or maybe till later in this presentation, I'll pull in a chart of something that, there are ways you can filter it with other indicators. Point of control, POC trader is a good example. So again, earlier I was talking about settings, right? Where highly liquid, you could do 15 or 100, 15 and 100, or 15 and 200. Medium, 15 and 50, or 15 and 75. And what difference does that make? Well, when you widen the delta, so this is 15 and 200 here, and this next one is 15 and 100. So here you can see you've got a couple cells right here, and on this move lower, and then a couple of buys right here as you move, make a nice 10-point move. And on the 15 and 100, you don't have any signals. Again, when I first learned this, I'll say indicator, but when I first learned this method of trading, we had very tight tight parameters, and sometimes you'd get maybe one trade a day or 2 trades a day, and some days you get none. But with the computer now, it makes it a lot easier. You can set the parameters to either say you want to get a little bit more signals, you can do that. It really depends on what you want as a trader. If you want to be very strict, I do have a 1 in 15 chart open, and it doesn't give you many signals. Or rather, I have a 1 in 25 chart open, and it does give many signals, but the signals that it gives are generally pretty strong. So I'm going to go through a bunch of examples of how markets look with different markets in different settings. And so the first one is a crude. This is a 5-minute chart. Okay. Now when you're trading with minute-based charts, you run into I'll say problem, but you run into something that's called time limitations, and there's going to be times when the market's just very quiet and it puts in cheap numbers. And when I say cheap numbers, there's just it could be lunchtime and volume just dies down, but you're getting bars printing because it's a minute chart, but the liquidity is not really there. That's why I prefer range bars, because I like to see the market move from price level to price level. But anyway, I know a lot of people use minute-based charts, so I want to show you how this looks on minute-based charts. So this is crude, and this is Monday. What day is this? Yeah, so this is October 24th, December crude, and you got some decent signals here. Nice sell here. This buy didn't really work out. A nice sell here. A little bit. This buy didn't work out. Then late in the day, again, I don't advocate trading crude oil after the old floor close. After 2:10 Chicago time, you do get some activity, but in generally people are done trading crude for the day at that time. And this is the next day, the 25th. You got some nice signals here early, and some nice sell signals here early in the day. Around the 50-50 area here, and even down here 50-30. And we sell off below $50. Got a couple buys here. The market just sort of went nowhere at the close. Again, after the close, this is 3:30 Chicago time. I gave a sell signal here, but I have zero interest in trading at that time. This is a 1-minute chart in the E-minis this time. Okay, so this is a 15 and 100 setting. Now you remember earlier I showed you, these charts here. These were 3 range charts, 15 and 200. You got signals, 15 and 100, nothing. So it depends. Do you want to get a lot of signals, or do you want to get very few signals? Sometimes when you're getting, when you adjust the settings to get more signals, you're going to get a lot that fail, right? So you want to sort of find that sweet spot. And again, I don't want to sound like it's curve fitting. Me personally, I just use general settings. I use these settings up here: 15 100, 15 and 200, 15 and 50, 15 and 75, 5 and 15. Again, I used to do all this in my head. It's easy. I could I'm so used to looking at it. It's one of those things I could just sort of figure it out in my head, and if it's close enough, that's good enough. But again, with computers, it can do it all for you. And it's giving some nice. It gives a lot more signal. Again, this is a 1-minute chart, so it might just fall. Some of these might fall within the parameters, but kind of cheaply, in the sense that there wasn't a lot of volume, so it fit in there a bit nicer. But there's some decent signals here. This is, again, trading S&Ps. Try to keep it around the cash, the cash hours, or even push it back to the 7 o'clock time U.S. 7 o'clock Chicago time. When the liquidity is there. Again, trading it at 7:30 p.m. at night is probably not the wisest thing, but you can give it a try. Again, I don't advocate it. I'd rather trade the markets that are open and liquid. So you can see after the cash open right here at 8:30, it gave this buy. It has a nice rally up there. And then 10:30, some nice sells, a nice little buy here, a nice sell here. This sell didn't work. These buys, kind of worked. This is the euro currency. It's a 6 range chart. Sorry, a 6E 10 range chart. Again, this setting is 15 and 50. You run into this little spot here, which is going back and forth, buying, selling, buying. Okay, and then down here, give a nice buy signal right off this swing low here. Nice rally up, and then it just went sideways again on you. 15 and 50 again on the euro currency. Again, it changed down here really quick here. So boom, boom, and then boom, give you this nice buy here at 109.40 up to the 65 area up in here. Even if you don't get out up there, it's giving you a lot of chance up in here to get something out of the trade. Again, it's a 1550 euro currency chart, 10 range. This sell didn't really work. This buy, kind of. It wasn't much out of it. And here you have double arrow. What does double arrow mean? It's the settings. Okay, actually I have this one set for flip A and flip B to be the same size triangle. If I had it set for if I kept it at 4 and 8, you'd have a small triangle, then the big triangle. But I treat them the same. In the next presentation, I'll show you examples of the differences sometimes how you get when you get between flip A, flip B. Again, I know some people that prefer flip B. And again, so you got this nice little sell here, buy, a sell. Okay, there's a little bit of chop in there, and then it starts making its way back up, and it's just straight up from here, 110, 109 double, 109.55 up to 110 even. Now this is a bond 1-minute chart. Again, I'm not a big fan of minute charts in general, but I always like to make sure things work, either whether it's a range chart or a minute chart. And you see a lot of arrows. Okay, well, I think, oh gosh, that's a bit chaotic, and it is, especially on a minute chart in the bonds, because you don't get a lot of volume sometimes. But in general, it's catching a lot of the big moves here. So you may get, again, it's a minute chart, so you could have tight stops. You're trading on a minute chart, you're not going to have a stop. You're not going to be in the trade 10 minutes against you. If it's not working out right away, you gotta cut it. Okay, but again, I know people that like to trade bonds on minute charts for very short-term trades. I don't say scalping, but very short-term, being in the market for very short-term. And you can see, okay, the market went down. This one didn't work out. This one failed. You're sort of spinning your wheels in here. Then it did give the second signal in here. Or sorry, this one comes after these two buys. Again, if you're trading a minute chart, you're going to be getting a lot of trades. And it did sell off. Okay, here you got another sell, and this was a nice move. I don't know what that is, 162.15. Down to 162 even. on a minute chart. That's a nice trade. This one would have been nice, but you got to sell there, so it's sort of you've been stopped out. But you caught a little bit move on the move back up in here. Caught a little bit of a move here. Caught maybe a tick or two here, another couple ticks here, maybe a little bit of chop in here. Maybe you got a tick out of this move. Some chop in here. Then again, it's nice sell here from whatever this is, 06, 07 down to 162 area. And back and forth. When you're trading a minute chart, really your targets are just a few ticks. And again, you're going to get days like this where it's just sideways with not much activity. Again, how can you profit from sideways moving markets? Is one, you have to identify you're in a sideways moving market, and a quick way to determine that is, one, you can look at the volume profile, know where the point of control is for the day, and are you trading around it. Two, another way is, are you getting a lot of signals firing off one right after the other? That's also generally a sign of, when I say a lot of signals, I mean, a lot of opposing signals, up, down, up, down, up, down, is also generally a sign of a market going nowhere. So, okay, starting back here, yeah, you could have got something out of this. This one, maybe not. In here, you'd be treading water if that. Here, you could have maybe got a tick or two here, maybe a tick or two there. Here, treading water here, you definitely could have got a couple of ticks. This one, you would have been hard pressed to maybe lose a tick. Here you could have caught a little bit of something. This one definitely failed. So even though it looks like shit, depending on your abilities, maybe you could have come out of all this sideways action with either a small loss or a small profit. Okay, so this is a 10 range E-mini chart, and the settings on this are 15 and 200. 10 range S&P chart, you're going to get massive volumes. You could get deltas in there of 10,000, and so it's going to be, you're not going to get a lot of signals on a 10 range chart, honestly. And this is how many days? This is the 31st, October 31st, November 1st, November 2nd, November 3rd. There wasn't even any signals. But you can see here, right, you had a sell here. Okay, I mean, I'm not saying you're going to hold it all through the next day, but then the next day you got a sell here. This sell here failed, and you got right back with the buy. And then on the 2nd of November, you got a buy here, and it was a nice little move up. So you've seen it on 1 minute chart, you've seen it on 3 minute chart, 3 range chart, 10 range chart. So this is a Bund 3 range, and the setting is 5 and 50. You can see the settings up here, 5 and 50. And what do you got? You got it's catching some nice moves here. You can get in, 163.05 somewhere in here. It's make moves up to the 25 area. Again, I'm not saying you'd get out right up here, but it's giving you a chance to get something, get at least 10 ticks out of the trade. Then again, you got a nice sell in here. And it's not like this move happened in 1 minute. This is at 9:15 all the way down to here at 9:30. So even if you're a bar or two late and you're getting in down here at at 9:24, even though the signal is kicking off at, I don't know what time that is, 9:15. You're talking, I don't know, 163.05 down to 162.95 area. This one didn't work out. These, could have got a little bit of something. But this is that time after 10 when the cash markets in Europe close. So take those signals with a grain of salt. Okay, this is a Bund. So this is, again, it's not every signal is going to work. This day, October 24th, there was one signal and it didn't work. Setting was 5 and 50, just like you had here, 5 and 50. So there was nothing, except one trade which didn't work out. Now, again, this is crude. This is a 1 minute chart. I think this was the 24th on this day, October 24th. And, while it gives good signals, right? Again, I don't recommend trading it around the clock on every contract. I tend to I advise to stick to dominant markets. I'll say dominant market, but stick to the main market hours, where you have the most liquidity. I would love to say, yeah, look, it gave you the sell here at 49.90, 49.85, and it just sold off immediately down and closed down here at 49.35. But honestly, you know what? It's not time that I'm looking to trade crude oil. After the old floor close hours, and then just taking a look at the night session, it's flatlined. You're getting some signals, but it's you don't have the volatility and you don't have the volume that you had during the day. So while you get signals, if there's nothing to drive a move, then what are you going to do? You could say, yeah, this one maybe got a couple ticks, here on this way back up a couple ticks. This one you had to wait before it sold off a little bit. This one, yeah, it did sell up. It did move up before coming off. This one just went sideways before stopping you out. This is just back and forth. But again, stick to the main hours of trading, the main session. Okay, so now I'll look at different markets on different types of charts and a few different settings. So create crude oil 1 minute charts. Setting is 5 and 15. Okay, and again, lesser volume. Generally, I prefer to have tighter settings, but again, it's up to you. So October 24th, what do you got here? Just after 7:15. Gave a sell here. Didn't work out. It did go sideways, so a little bit lower. But again, I don't consider that a victory at any means. Later gave another sell here. Yeah, you could have got something out of it. 50-30 down to whatever that is, 50-15 area. Again, I'm not going to say I'd hold it all the way and then move back up here and down here and move back up here and capture this whole thing. No. Again, I'm trading a 1 minute chart. I'm just looking for that quick move. The 25th, there were no signals. I want to show you, even if there's no signals, just so there's always going to be the person that says, well, you left out this day, and there's probably a lot of failed trades. There's no trades that day. There was no signals. Okay, then, later in that day, that was this day here, the 25th. Later in the day is when you had that big sell-off. That was that chart I showed you earlier. But again, at this time, I'm not. I know very few people, even die-hard crude traders, that all they trade is crude. They're not necessarily looking at the market at this time. Okay, so the 26th, one signal, and it's interesting because this is the inventory numbers day, October 26th. It was a Wednesday, and honestly, I would probably not be looking to take any signals. Let me rephrase that. I'm not looking to take any signals in the crude just ahead of the number. So if it's 927 and I get a buy, I can't, because while this market did move in the direction of the arrow from 48.90 up to $50, and it's a great trade. I know a lot of people would be happy to have it. What if it went the other way? And it can, because sometimes you don't know what these numbers are coming out at, and for people that I don't want to say I'm a conspiracy theorist, but I do think sometimes these numbers are rigged. And you saw it with the election, with all these polling numbers and how way off they were, is because they were giving you numbers that they were manipulating the data. They would call houses to do polling. Okay, and say, can I speak to the youngest person there of voting age? So rather than speaking to the parents, they'd speak to the guy that's 19 years old. Who do you like? And it's, oh, Hillary. Okay, well, this family likes Hillary, but everybody else in the house supports Trump. So if you're trading around a data release, you got to be careful, because especially under this previous administration, I do think these numbers do get manipulated sometimes. And okay, again, this is later in that same day. Yeah, there was a couple signals late in the day, just before 2, a little bit of a sell here. Nothing, this late rally. But again, I'm not really looking to trade it after after 2:10, after 2 o'clock essentially. And okay, again, I just want to show you this. This is the evening time. You don't have a lot of liquidity in crude at nighttime. I used to take a lot of heat from the salesmen at JP Morgan, saying, "Oh, hey, we got this, we got a customer, this guy Adrian at Chevron. Can you call him up? Just let him know what you're seeing in the order flows in the market." And okay, it's the Asian hours, and don't get me wrong, crude oil does trade a lot during Asian hours. It trades, China is a big consumer of crude. But really, the contracts that are really traded are traded OTC, not in the futures. So, while I call them up and chat with them about the market, sometimes there's just nothing happening in the crude. You can see this. You're basically looking from, 7 o'clock at night until 9 o'clock at night, and what you got, you have a range of about 10 or 15 cents, and there ain't anything going on. And so when you're trading in a market where there's generally nothing going on, I don't say you're going to struggle, but you're going to have a hard time finding a direction when there is no direction. You can have a bias, but it's not going to take much to move the market. So stick to the main hours of trading. The main hours when the most liquidity is there. But I just want to show you what it looks like in times when market's not very liquid. You're going to get stuff like this. Okay, so this is October 27. Again, it's 5 and 15 is the setting, and after 8:45, you give a buy here. Honestly, this would have stopped me out. Well, there was one earlier, 6:45. But again, it was borderline if you'd be looking to take a trade at 6:45. Even though crude activity does pick up during the European session, when the old floor hours of the IPE were, I think I forgot what time it was, 4 o'clock Chicago time is when, 4 in the morning is when IPE used to open up, and then you would get a lot of liquidity coming in because, people were trading the arb between Brent and WTI. But, realistically, 7 o'clock is, the time when things really pick up. You can just see how the ranges, in here is pretty tight. Then it starts expanding. You're getting bigger ranges during when there's more liquidity in the market. So this one here, again, it gave you this buy. It didn't really work out. I think that would have stopped you out. Gave you this sell before it popped up, before it sold off. Okay, so yeah, I mean, it could go either way on that. You can either have been stopped out or not. Then on the 28th, these are the days that you like, where you don't get a lot of signals, but the one that you get is nice. You get this nice signal here, 49.30 area, trades all the way up to 49.70. Again, I don't expect you to get out up here. The market is giving you this buy here. Honestly, when you get up, even if I would have got out up here, but somewhere in here, probably down, towards here. But if you make this, what do you see here, right? You have this head and shoulders here. So say you're going up, you hold it comes pull back, okay, then it shoots back up again, then it's sort of coming in here. There's two ways you could look at it at this point. Either, this is, you move up, the retracement, then move back up. Maybe this is going to be a retracement and move back up. Honestly, I would look at it. It's easy to see it. You can say I sort of have this head and shoulders. At this point, it can go either way. And do you want to take that risk? Do you want to leave any more money on the table? Because you already come off. I haven't done any fib numbers on this, but just looking at this, it's one of those retracements where people, the fib guys, if we did go back up, they'd say, oh, you see, you got that retracement. But on the surface, really quick, you can sort of see it forming kind of a head and shoulders, which is at this point is bearish for the market. So the next chart that I'll show is crude oil. It's a 987 tick chart, and settings are 5 and 50. So it's the previous charts I think were what was it, 5 and 15, right? You can see it up here, 5 and 15. So the next one is 15 and 50, and 987 tick chart. You're going to have a lot more volume and bigger deltas. So because it's a 987 tick chart, it's not a minute chart. And so you could expand the settings a little bit to take in, look for more trading opportunities. Again, if you're going to stick to something very strict, you may not get, very many. So 987, October 31st, Halloween. What do you got? Well, again, I'm not going to call this trade here at 3:30 in the morning, but 8 in the morning gave a little buy here. It did go up before, sort of gradually worked down and wiped out. And then here's a nice one. You get this nice signal here around the 47.40 area, and gives you another sell signal here, but you should have already been short. Down below 4,700. Then you get into the the closing period, and here this one just before 2 o'clock. Here at 46.81. So you got one trade here. It didn't work out. Okay, it's not the end of the world. And you get your second trade here, and it's the nice trade. Nice beautiful move. This is the next day, November 1st, 987 tick chart, and settings 15 and 50 again. 7 o'clock here. Nice little rally up. Sell. It comes down a little bit before it turns around. Okay, here you got a nice sell, and it comes down into this area of some sideways action. This one, probably would have stopped out before turning around, and this one, it did pull back a little bit before shooting back up there. So you got at least one nice trade here, one nice trade here. It's debatable if you would be trading at this time, but again, crude I think it's okay starting around 7 in the morning, but even that, if you don't, say you start at 8, it's here, you at least catching one nice trade, two nice trades, two that you could add very minimal risk there. Okay, this is November 2nd. Again, 7 o'clock, same setting still, 15.50. 7 in the morning here. It's giving you a couple, a buy and a sell. This buy didn't really work out. And then you got this nice sell. It sort of came in again. It's 7. Would you take it? It's up to you if you trade at that time. This buy didn't work out. Petroleum numbers, inventory numbers come out. It's all that volatility there. Later you get a sell here. It started to work out before it started reversing. Then you get the sell again around a little bit higher level. You got a decent move here. Then a couple buys a little bit later. This one, over the next few bars worked out before just going sideways and falling over. This one, again, same thing. Not much of a move higher before going sideways. November 3rd. Nothing really worked out. Again, this is right before 8 o'clock. So again, it's up to you if you want to trade at that time. It's you'd be treading water. Probably take a small loss. This one, again, it did, that's about a 15 tick move here, 14, 10 or 15 tick move up before turning around. This one failed. This one, just went sideways over the next 30 minutes before falling over. Again, if you're in a trade and it's going sideways for you for 30 minutes, chances are it's not going to work out, because if the direction was going to show its strength, it'd be showing it already. It's not going to just go sideways on you for 30 minutes and then start to work out all of a sudden. If it's going sideways for 30 minutes, chances are the signal really starts losing its effectiveness, the longer it's in the trade and the trade's not going anywhere. So again, people will see this and say, oh, this is pants. But it's people understand. A lot of people don't understand how to trade. They think that every time you buy, the market has to make a move quickly. Okay, but oftentimes the market just goes sideways on you, and the key is to recognize that the market is going sideways and it's not working out for you. So again, if it's not working out for you after a period of time, don't wait. Don't start praying, hoping and praying that it's going to start working out all of a sudden. Chances are it's not going to work out. Okay, and lastly for this week, it's November 4th, 15 and 50 chart again. This is the time before 8 o'clock in here. You got a nice little buy, a sell, a buy, a sell, before it catches this move. But again, do you want to trade before 8? Again, it's up to you. You're getting some mixed signals. There's times it works, times it doesn't work. I think you just part of trading is understanding what you're comfortable with. But still, later on in the after 9, got this sell here. I don't know what price this is, 43.80. Makes a move down to the 60 area before turning around and going back up. I know people that will send me their chart, say, oh yeah, see, gave a sell here, but then it turned around here and went back up. and I lost money on the trade. Well, how could you lose money? The trade's 20 cents in your favor, and you ended up losing money on this trade. They're not using sound money management. So here's a nice little move down. You get to trail your stop. Nice little move up on this buy, and then you get a nice sell here, and it's just literally straight down from 40 area down to the 10 area before pulling back up to 20s. You get a buy here. This one doesn't work out. Just before 12, you get a buy here. Again, it just goes sideways on you. Then you got a buy here. Sideways, finally turned up, but again, if it's going sideways on you and just a little bit against you, that's not a good trade. This one didn't work out, and then now you're going in right into the close there. So again, that's a 15 and 50 chart on what I consider a medium volume market with with slightly heavier volume than other markets. Okay, so the next one is a bond, and I'm using a 15 and 250 setting. Okay, why 15 and 250? Well, bonds trade pretty decent volume. I could use a 15 and 50, but I might not get many signals. 15 and 250. I'm showing this to let in a bit more signal so you guys can see how how settings can adjust it. And again, I know I'm showing these on bar charts. The software works on order flow charts as well as bar charts. But sometimes I think it's easier to show charts on just candlestick charts. It's just a bit easier. So here you got two signals. It's the A and the B at the same time. Again, you got a little bit of sell off, and then you got a buy here. This is just before 7 o'clock, so it's probably not the best. Although there was a nice trade here. This one here didn't work out. It gave you the sell, and then it just popped right back up against you. Then on November 1st. Again, you got this buy here. It popped up how many, from 162.06, 162.14. Sell, this one didn't work out. Then you got a buy right after it. And again, it's literally almost a full point move. 162.08 up to 163.08. These are the days that you dream about, where you could catch this 1,000-point move right there. This is November 2nd. Again, you gave this buy here. This one didn't really work out. It just started drifting down against you. Sell here. This one, not really. Also, just sort of turned around on you really quick. Here was a buy. You could have got something out of this. Quick move up. This sell. Turned around, give you a buy right afterwards, so you'd have to cut it. And then, but it did give you a move from 18 up to 28. Again, I'm not saying you would have gotten 10 ticks out of it. You could have got at least something out of it. And then it turned around and gave you a nice sell signal here. 163.22 back down to 163.12 area. And, a couple little buys here and a couple in another sell here. So, there's trades to be had in there. Again, is it every trade going to be a winner? No, of course not. You can't control what other people are doing in the market. What you want to do is you want to read what they're doing in the market and react to it. And again, this is November 3rd. This is the next day. Just before 7:20. Bonds used to open up at 7:20 in the morning. So generally around 7, it's already very liquid. Actually around 6 o'clock Chicago time, the liquidity really starts picking up. But still, I'm an old timer. I say old timer, but I remember when bonds opened up at 7:20. That was the big. A lot of things opened up. Currencies opened up at 7:20 as well. So, around 7, you really pick up in your liquidity. So you can trade it then. So there was a nice move up here. Gave us a sell. You got this. I can't think of the word. This hammer bar. Did trade down before turning around. Then you got a buy, and it's a red candle, so it opened up here, came down, and then shot back up. So there was something to get. You can have gotten something out of there. Then you got this sell here, and it's a nice move down. This buy just goes sideways on you. Here's a buy that next bar straight up, and the next bar continues that before coming back down. This bar up, and November 4th. This was non-farm payroll day, so even though you got these bars, it's going to be hard to trade around. Non-farm payrolls, I tend to give it 15 minutes for the market to settle down. So even though you see sell here, it's a nice one, a nice sell here. This buy didn't work out. Again, this is that time, 7:30, when the numbers release. So you're not going to be trading that. I mean, be realistic. You're not. And I mean, I want to say you're not, but people like to trade it. But it's just one of those times where you don't have to force yourself to trade. You don't have to trade around non-farm payrolls. Let the market settle down, okay? And I give it about 10 or 15 minutes. And here it's almost 7:48. This bar gives a buy, and it just shoots up again. It's another one of those big moves, 162.28 up to 163.25. Again, I'm not saying you got all this move, but you could have got something, at the very minimum somewhere, at least in here. But then it gave you another buy signal here, and we shot up again. So it's giving you plenty of opportunities. This one is some chop here, sell, then buy. But then here it's a nice little move up, sell again. Went down before you give another buy again. Honestly, non-farm payrolls is a day I don't trade, because I know that the market, there's a lot of forces at work. People adding or taking off positions based on what they're expecting the Fed to do based off the non-farm, the jobless number, the job number. So it's just a day. I'd rather let things settle down if I'm going to trade. It's a day I usually take off from trading. So okay, moving on. This is E-mini. This is a 3-range chart, and the setting is 15 and 200. Honestly, on a E-mini 3-range chart, you get decent volume. You get 2,000 or 3,000 lots trading in each bar, more or less. Sometimes more, sometimes less. So again, you could have it tight if you want. You could do 15 and 100, 15 and 50. You don't even have to do 15. You can do 5 and 200, whatever you like. I'll talk about more in the intensity in the next video, which I'll do this tonight, I think. Again, I don't want to put too much out there in once that it's gonna make a 4-hour video on how to use this, but people just don't have the time to digest it. But hopefully, once you sort of go through the manual, it's not a big manual, it's about 10 pages, and put the indicator on. Once you play around with it a little bit, I'm sure you'll zero in really fast on the settings that you like. Again, when I first started using it, I had very tight settings. 1, I didn't use 15. 1, I had very strict, because I'm using my head to calculate this stuff. So I don't want to be messing around with 5%, 10%, or whatever for the setting. It has very tight intensity. So E-minis, again, I prefer to wait for the cash open in the E-minis. So that's 8:30. So you got this little buy here. Yeah, it did go up a little bit, but nothing. Then you got to sell. Sold off a bit. Sell, buy, one right after the other. Not really working out. Then you got to sell. It did make a little bit of a move. Not much. About a 2-point move. The next day, October 25th. This is the cash open. I tend, again, when the cash opens, I tend to give it about 5 minutes to settle down. Then I'm looking to start trading. It then gives you a couple buys and sells right after the other, and it finishes with this buy. And I did get that little of a pop up, came down, pop back up before falling over. Here's a buy that didn't really go anywhere. The sell, you get this double buy again. It just turned on you really quick. A 3-range chart, okay, is a very, very fast moving chart sometimes, and it's probably, I don't say not the best chart to look at, because I do trade it. But you got to realize sometimes you're going to get a lot of false starts on a short duration chart as a 3-range. I prefer a longer duration, but sometimes if a market's not really moving, then you're not going to get many signals on a longer duration chart. But I just want to show you how it looks on a very tight range chart, a 3-range chart. And while this day, this is the 26th, but if you go back to the 25th, it's kind of crappy. You know, it didn't catch this move down. You know, people come to me and say, I want an indicator which is going to catch all this. I want to catch this move. Okay, well, you know, maybe there wasn't anything in there indicating that move. You know, you could catch some small moves here, but still, you know, it's not that move. And then to give up. Well, you know, oftentimes it's, you know, it's like that picture of the guy tunneling, and finally he gives up, and, you know, 2 feet beyond where he gave up is all the diamonds or all the gold. And, you know, sometimes people just give up like that in trading. They don't want to see things through. Like I said, people want things spoon-fed to them, and, you know, they don't want to add it to, you know, rather than come up with their own way of trading, their own method of trading, they want to, you know, have everything put down for them. You know, I like dealing with everybody in the inner circles, because, you know what, you're thinkers, right? And, you know, you want to learn how to trade. You want to know how you can apply these you know, order flow tools to your own style of trading. Again, I don't expect everybody to use every single thing that I talk about. No, not at all. Hopefully, you know, if you could just get, you know, 1 or 2 things that apply it to your trading, that's going to turn your trading around, then that's great. You know, that's what you want in your trading. So again, you know, this is the E-mini 3-range chart setting 15,200 still. This is October 26th. I think this is the Wednesday already. You know, this is the one right before cash. Okay, it didn't really work, sort of went sideways. And after the cash, 8:30 it's in here. You get some sell signals here, worked out a little bit. You know, you're talking 28 down to, what, I don't know, 26. A couple buys shoot off right here as after 9. You know, kind of goes sideways before, you know, makes this monster move, 10-point move. This buy doesn't really work out. You got a sell here that, you know, worked out, then came right back up to that area. Then you got a buy, it worked up to a sell. And, you know, again, you're talking around the 30, what that is, 37.5 area down to 33. You got another sell there. And, you know, later in the day, this is that second sell. How did it look? You know, it gave you this 2 sells here, but then it flipped, it turned around on you really quick, and, you know, just went back up here. So from 32-ish, you know, back up to 35, and this is right around the close here. So again, you're not going to get a lot of cheap signals. And October 27. Yeah, again, this is right around the cash. This is pre-cash in here. This is right around the cash. This one is just, you know, right after the cash again. It's one of those things, you know, do you want to trade on the cash open or do you not? You know, if you don't, like me, I would have missed that signal. Did get a little bit of signal here. It kind of worked out a little bit, not much, 2 points, 3 points. This one, yeah, by the time you get in and get out, you know, you'd be lucky to break even. These didn't really work. The sell, this one, but came around with a buy really quick. This buy was a bit better, you know, later in the day. And, you know, as you go in later in the day, that's where you were. Just what time was that? 11:10. So that's this area right here. Moving on to later in this same day, you know, like some chop, and then here, this area in here, you got some nice sells. You know, so you're short here, started coming back, maybe you can break even here. Definitely you would have got the sells, and you probably, you know, it never really pulled back, so you're getting short around the 32, 33 area. You know, the first time it sort of stops and pauses, it's somewhere down around the 28. You know, this one, yeah, I think this is maybe even here, but still, you know, that's a nice move if you could get it either way. And lastly, the 28th of October, this is the Friday of that week. This is still the E-mini 1520 chart. These are pre-cash. This is right after the cash open. Like I said, I generally give it 5 minutes. So you get the sell, then it turns around with the buy really quick, and it just shoots up. Again, it's up to you if you would have, you know, again, you're splitting hairs. You know, if you say I'm not going to take any trades for the first 5 minutes, okay, so you missed this trade. Give you some buys here. You could have got something out of, you know, this sell came right on into this buy. Then you got another sell here. You know, it just then sort of comes back up. So you could have got something out of this, then, you know, this sell, then a buy, came right in. This buy would have stopped you out, and you got this buy right off the low. you know, at 26, it makes a nice move up, 8 points. This one, well, you still be long. I don't think you'd be looking to take a new long up in here. If you're already long, you just let it ride. If you got out up here, it gives you another entry up in here, you know, again around the 32, 33 area up to the 34, 35 area. So, you know, I'm going to end this presentation for now, at least, you know, that's more of an introduction into the indicator. And again, you know, highly liquid markets, what do I consider highly liquid? You know, it's obvious, E-minis, bunds, Euro stocks, 10 years, 5 years, medium liquidity markets. Yeah, actually the difference between highly liquid and medium liquid, you could almost use the same settings, but you know, I tend to put these markets a shade less liquid. I mean, I could almost move the bonds up into this highly liquid market, but it just feels like sometimes there are times where it's not that liquid. Crude, you know, no pun intended as far as liquidity goes with crude oil, but you know, it varies. It can go between medium to high, you know, be like medium high. Low liquidity, definitely YM, DAX, NQ. And you know, my preferred settings generally on the more liquid markets, it's 15 and 100 or 200, 15 and 200. Medium liquidity, 15 and 50 or 15 and 75, even though I did show you the bonds of 15 and 250, and that's considered a medium liquid market. But again, you know, I'll show you what it looks like on different markets. You can always experiment yourself. Low liquidity markets, 5 and 15. You know, this presentation is already running an hour, which is okay. But I just want to show you. I think I got a chart. I still have my Ninja Trader open. If I've got the chart here. Of course, when I want to find it, I can't find it. Hold on, let me just pause this. Okay, here it is. This is the mini Dow. This is the POC trader and the flip on the same chart. Now, you know, shit like this that you don't want to be trading around, you know, where it's just going sideways. Ideally, if you could have something to help filter your trades. And, you know, I'll in the next presentation, I'll show a bit more the flip with some of the other indicators that can help. But, you know, if you can, you know, add, you know, point of control, right? I've done all those presentations on point of control for you. So, you know, if you could combine them, you know, what's the word? Confluence, where you get, you know, several indicators giving the same thing in the same direction. Ideally, you know, if you could get, like here, you've got, you know, you've seen points and controls. This is point of control at the extreme. It's a 5 range mini Dow chart. This flip though is set to 5 and 25, not 5 and 15. And you know, this is just the default settings on this chart. I opened it up yesterday in the morning, and I didn't change it. But you know, here you're seeing points of controls on the bottom. You're not seeing any points of controls on the top. So you know, what's that telling you? Well, maybe at this area there's not much resistance, but you're seeing a lot of support. Okay, so you're getting, you know, points of control, points of control, points of control. And then you know, you're getting the buy signals, and the market pops up again. You know, trading the Dow. It's best to trade the Dow during the main session, you know, during the cash hours. You know, what are you going to do with this? You know, this is that shitty area where you're just going sideways. Buy, sell, buy, you know, sell, sell, buy, sell, buy. You know, you're looking for areas where you're getting points of control in the same direction. You know, this one here is how many bars away? 1, 2, 3, 4, 5 bars away. So it's probably not that strong. And then you just come right back with the point of control in the opposite direction here. You got point of control one right after the other. It does shoot up here till you get to this one. And this one you got point of control, and then you get the flip right here. You know, it makes this nice move. 18, you know, 755 or 750. And what it do, it just trades all the way down, you know, down, down, down. I'm not going to, you know, look for it to go any lower, but you know, very fast, violent, swift move. From, you know, 918 over the next 10 minutes, that's a move from, you know, 55, 50 down to 10. But you know what you want, you know, ideally if you could get these bars with you know, point of controls also giving you some sort of signs, you know, or you know, if you're getting bits of clusters in here like this, you know, all these little buys in those sells. It's also very very good. This one I would have liked to get a bit of a more of a move, but you got a little bit of a move before it turned around on you. I think that was it before going into the close. So so that will end this. That will end this presentation. And I'm getting all caught up on everything after this whole presidential stuff, and the Cubs winning the World Series. It's just been a very interesting last couple of weeks for me. So I hope you guys download the indicator and are able to use it in your next in your trading. You've got a couple more indicators also coming out, hopefully before the end of the year. NinjaTrader did make a big announcement the other day that they are going to release NT8 officially out of beta on Monday, November 14. These indicators still work on NT7. They're not for NT8. I'm not going to make the switch to NT8 until next year, after the new year. Even though it's officially released, I do think there's still be a couple bugs cropping up here and there that they probably haven't found yet. And oftentimes you don't find these bugs until people really use the software intensely. So and for me, you're coming up on year end, and Thanksgiving, I'm usually off. I don't trade for that week, and maybe a couple of days afterwards. And obviously during December, you got basically Christmas and New Year's, where the markets are very quiet. A lot of markets are closed, and I'll probably be taking a couple weeks off in December as well. And during that time, we'll get caught up on moving things over to NT8. But for now, I know most people are still going to be using NT7 as well until January at least, because NT8 is nice. I'll admit it. It is nice, but it's a bit different when you look at it compared to NT7. And for some people, it's not a small change. It's going to be a big change in their looking at the markets. So again, thanks everybody, and I look forward to the next presentation, and I said hopefully I'll get that up for you guys again still this weekend, so I can be all caught up. And any questions, just shoot me an email, and just go to the members area and download the indicator. It's there for you. Thanks. Bye bye.